Hey guys, so it's been a couple of weeks since I've been able to get you an update in the markets. I was sick one week, I was out of town another week. I think I was sick of being out of town, something like that. Back at it this week though. The quick overview without getting into a lot of details is you've probably already noticed that interest rates have improved a little bit over the last week or so, maybe 10 days or so. Mortgage-backed securities have been trading in a better range, actually fighting up against a ceiling of a 200-day moving average. Actually today's intraday trading has been getting a little bit above that, which is really good. I think that's going to, if it holds, some sustainability in this trading range will be really good. It means we're going to hopefully hold these rates where we are. But the swings have not been huge. We're not going from like 8.5 to 6.5 or anything like that. Most of your conventional rates are going to be in the low to mid sevens. But I want to address that because the reality is, as you may say, hey, you got 7.25. Why is my rate at 7.875 and I see somebody else at 6.875? It surprises me there's so many people in the real estate profession that still don't quite understand exactly how interest rates work. And the reality is, it's because it's a little ambiguous. It can be. It's complex, to say the least. There's a lot of different variables. Somebody called me over the summer and said, what's your interest rate? And I laughed. I said, there's 18 different things you have to count for to come up with an interest rate, but I could get you whatever you want. He said, what do you mean? I can get you a 0% interest rate to a 9%. He said, how do I get zero? I said, all cash. You pay all cash for that house, your 0% interest rate. The reality is the cost of an interest rate has to be accounted for. And the cost comes from so many different margin adjustments in the loan. So for example, if you might have a rate of 7.5%, and let's say that I would call that par, meaning there's no points added to that. If I make that 8% interest rate, you get lender credits, or if I buy down those points and add points or add fees to that, you'll get a lower rate. Everybody seems to understand the point system by and large. But what we don't often understand is that loan to value adjustments. The more money you put down, the more equity you have, the better your rate's going to be. The higher loan to value, a little bit more margin added to your rate, a little bit more. The lower your credit score, obviously. Also, different loan programs. If you're an FHA versus a conventional, FHA rate's going to be a lot better than conventional, of course. The MI is going to be a lot higher, and sometimes the payment on an FHA is at or more than it is on the conventional, even though the rate is lower. So there's a lot of factors, but one thing we have to remember, and it was a little controversial over the summer, was the LLPA, or the loan level pricing adjustments that were made in Fannie Mae as well. You may say, well, I've got an 800 credit score. Why is my rate a little bit higher than my neighbor who's got a 650 credit score? Well, it's because of those LLPA adjustments. So there's so many different variables in there, and that's why your rate and my rate, albeit may look quite different, depending on whatever our situation is, depending on the equity, depending on the LLPA. Let us talk through all those potential buyers that you have, to walk through all that, because unfortunately there's a lot of lenders out there that's throwing a lot of smoke and mirrors, trying to get a lot of fees, and trying to flash interest rates, because everybody's focused on interest rates and they're getting fees and they're charging fees that they don't necessarily have to pay or even should pay in some respects. So we got to get the whole picture, because the overall cost of borrowing is what you should really be focused on and what you should be concerned about when buying a house. So, hey, 2024 is on the horizon. If you guys are looking to make plans and goals, I'd love to be a part of that, how we can help you. So I'll be reaching out to several of you over the next few weeks, how we can kind of put a plan together and hopefully get you more transactions, get you more buy side, even some listings. And I want to be a part of that plan and want to help you guys win in 2024. You guys have a great weekend, and we'll talk to you soon.